With interest rates going down the past couple of weeks, Austin saw a surge of new buyers. We had ACL, we had F1, but buyers were coming to the market. So much so that last week we had more sales than we have as far as new pending listings, all the way back through August. Now, interest rates have gone up today and yesterday after the Fed spoke, and they were very hawkish. With that being said, do you think that we're going to continue on that trend? Well, let's dive a little bit into the data for Austin real estate, and we are going to see where we currently are and keep tracking it, even with the increase in interest rates. So first and foremost, I'm Danielle Fountain. I'm the founder of The One Realty here in Austin, Texas, where we take a data-driven, all-in-one approach to real estate. We're going to hop first, and we are going to look at our weekly, my weekly numbers. So I track the Austin's numbers every week because I want to see what is happening and what is changing before anyone else does. So first and foremost, I'll zoom it in so that if you're watching, I know there's some people that join on Instagram and different stuff that way they can see it on their smaller stages or screens. So first and foremost, you're going to see our listing activity. Yes, it started to dwindle. We're nowhere near having like a decrease in supply. Our supply is incredibly healthy for October. Almost, I say, compared to what is being sold, we have an absorbent amount of supply here in Austin right now. Our average price point, nothing has really changed in the past couple months. We're sticking right around that 1.1 million and that 650,000. Days on market have also kind of stalled. We're not really going up. We're not really going down. It's because we're also seeing new houses. Some of them are coming to the market, and some of the older ones are actually either getting withdrawn, they're going under contract for rentals, or they're just going under contract because of price reductions. This is very interesting. The number of listings with the price reductions has actually gone down. So at one point we were at 60%. We're down almost 3% from our peak. So we're seeing a decrease in the number of listings with price reductions. One, they're either getting taken off the market. Two, they're getting sold because the price has gone down so much that a seller needs to sell, that buyers out there looking for deals have made those deals. Next, we want to look at where are these listings? Are we having more listings come to the market? So we had 198 new listings come to the market this week. 38 of them, I say repeat offenders. They've been on the market before, kind of aged inventory. So not a ton of new listings, which is where I say this time of year, that's completely normal. And at the same time, our inventory is still kind of stagnant. I'm surprised that we're still over 3,000 listings going into November. And then their price point, very similar. I'm not surprised they're a little bit higher. That's because they're kind of testing the market coming into it. Now, for our total number of listings, there are listings that go off the market, those that are go on hold, they're withdrawn, and they're expired. You're going to kind of see these numbers right here, what they are. In essence, we're looking to see how many listings are being taken off the market. So there was 93 that were taken off, not a dramatic amount. You're seeing for our median days on the market between 75 to 101. So you're looking at sellers are taking anywhere from like 2.5 to, I'd say, almost a little over 3 months, and then they're deciding to take it. It might be a little bit early to pull your house that way. And that's because if we look right here, if we look at our listing data, you can see right here, average days on market is 96. So they're pulling them a little bit sooner, and it just might be, hey, we're going into the holidays, or they found a renter or tenant for it instead. Now, if we look at our pending data, this is where I'm saying, hey, Austin, pay attention. I'm paying attention to these numbers. I'm talking about these numbers right here. I just pulled that over a little bit smaller. We are looking at our total number of pendings. This time of year, we're typically seeing our number of pending listings go down. We typically don't see it go up, and that's going to be this column over here, our net difference. We typically don't see it go up until we start getting into like January, February. We'll start seeing them go up, but we're rising, which is like, hey, someone's watching. Now, interest rates just went down to almost our year low. Actually, we tied for our year low, but we got a little kick in our pants yesterday, even though the Fed fund rate was cut by a quarter point. It's not just because the federal fund rate cuts a point does not mean that we're going to see it in the mortgages, because a lot of times mortgages already have the cuts already put in there. The big thing is that the chair Powell was very hawkish in regards to whether he was even going to the cut was going to happen in December, what was going to happen with the labor market if you thought it was a little bit stronger, as well as it comes to inflation, thinking that, you know, there could be potential inflation. So all of that ultimately resulted in our 10-year treasury going up a little bit, and that hurts us when it comes to mortgage rates. So just because the federal funds rate is cut does not mean mortgage rates will be cut. There's a lot more that's going on. I have a video about that you can go and watch. So with that being said, we did see our weekly pendings go up. Total this week for weekly pendings, we're at 172 new pendings. And people are going, why are you excited about this? Well, let me show you. So I track weekly pendings every week. So you can see right here, I'm tracking every week how many houses are going pending, because it's going to kind of show me, hey, where are we? So we saw this one blip right here in September. I mentioned earlier, hey, we had 179 last week go pending, which that is really, this is really good. If you look in the context of all these months, you might not think it, but if we go all the way back to 2024, I started tracking this manually in 2024 and keeping this data. Because when houses don't sell, they get taken off the market, or different things happen during it, we won't see that listing data, it'll go away. So I want to keep snapshots of every week, what happens. And so you can see last year at this time, we're 150s, 160s, you're seeing, then we drop down to 136. What's happening during this time too, you can see right here, interest rates, we hit 7%, and all of a sudden it just shut off. So we're like 6.2, all of a sudden we hit 7%, and it just, you can see right here, the numbers, when we're above 7%, they are shutting off. So anytime that we get low, you're gonna see it spike up. So you can see kind of we drop down, we're in the 6s here. This is why our numbers are better. Interest rates matter. So we're seeing right here, we're seeing some activity. We're still at like a 6.33, I think is what it is today, which is still great if you look in comparison. If you look at our historical since 71 or 79, when they started tracking, I think 71, when they started tracking interest rates, the average interest rate is a 7.73 or 7.74%. So in context, it's low. But if we remember 2021, and we saw those 2 and 3s, that's historically, that's insane. So it's getting people back to like, hey, here's where this price point, here's where the interest rate is. Granted, home prices were not nearly as expensive as they are now. So with that, we're going to go back to our weekly numbers, and we're going to see right here, our weekly pending, obviously it's up. No major shifts in our price point, which I'm not surprised at. We're kind of sitting around the 800,000 sales price, 600,000 for the median sales price. Our days on market, they're a little bit higher this week for pending. And the reason they're a little bit higher is we're kind of eating at some of the inventory of the older homes. So I expect this to continue to go up. If we see this drastically drop down for pending, if we see drastically drop down for our pending, that means that there are buyers out there, they're watching the new homes, and new homes, as soon as they come on the market, they're getting taken off. So maybe you have buyers that are kind of, I say, sharking and swimming and waiting for that house to come on the market. And if it does, and we see a lot of that, that means that we're probably having buyers that are sitting on the sidelines waiting for inventory to come on. So we'll pay attention to that if these numbers start going down. When I talked about above, we saw the number of listings with price reductions have gone down by almost 3% in the past couple months. You can see, hey, we're increasing down here. This is higher. Not surprising either. You've probably had houses that were a little bit higher up that sellers have continuously cut their prices. And that's why we're seeing the percent of the listings with a price reduction. That's why we're seeing that jump a little bit. So also, and if you're joining me a little bit late, my name is Danielle Fountain. I'm the founder of the One Realty here in Austin, Texas, where we take a data-driven all-in-one approach. Be sure to share this so that other people can see this, or actually if you save this, if you're on X, or subscribe if you're on YouTube, that way you can find me and my weekly analysis and data update on the Austin market. So this right here is great data in the sense that your pendings are really kind of like your leading indicator. If you're looking at closed listings, that data is too far removed. Closed is about 45 days past the market. Seeing this right here, I mean, that kind of gives us hope to like, hey, there's some activity swarming around in the Austin real estate market. Now, we are going to head over here and we are going to look at our closed sales. So you see closed sales, this number is continuing to fall. That's just because if we go back 30 days, our pending listings weren't necessarily going up. It really started these past 2 to 3 weeks. So I'm not surprised. We'll probably see this number start to trick up to tick up, in the next week or two. We are going to see our closed data start to follow that of our pending. So you can see there's kind of a big dip between our total number of pendings and our closed. Now, this is a 30-day closed snapshot. So every 30, I'm looking at rolling 30 days. What is happening? What is happening? What is happening? You'll see that our average sales price, they kind of ticked up here. Nothing really changing with our median. What is surprising, and this makes me know like, hey, there's buyers that are coming back. They're coming back a little bit early, is the close to list price and the close to original list price. All of them are green. That's crazy. All of them are green. This time of year, we continue to normally trend downward, and it goes, we're selling it cheaper and for a bigger percent off, and we're continuing to see that. In this instance, we did not see that. We're kind of seeing an uptick. So we did get a surge of new buyers, which makes sense because we saw interest rates falling. So you might have seen buyers come to the market. As soon as the house came on the market, they bought it, or they've been watching the market for a while. That house that they were looking for, that came on the market, which would explain also why these numbers don't necessarily change much, because that means that they're not older listings, they're newer listings that are going under contract. So this is, I say, a good news for sellers. For buyers, it's a, hey, buyers, pay attention. If you like a house, it comes on the market or it has a big price drop, pay attention to that, because it's indicative of there's other buyers that are also out there. And that's why I go back to, if you've been watching for a while, we have a lot of inventory. So having almost 3,200 homes for Austin this time of year, that's a lot of inventory. That being said, that means that people are, I say there's also another effect where it's like you have so much choice. It's like you can't choose a house because it seems like you're constantly aware where there might be another house that comes on the market that's better. So paying attention to that. Now, if we hop over here and we are going to look at one of my favorite things to look at is our monthly data. So we've kind of talked about September. Rolling up September was rough. At the end of the day, we saw year over year drop in sales price. We saw month over month drop in sales price. We were very close for our year to date as far as going all the way back to December for our prices sold. Now, if we look at October, it's kind of telling a different story. And this tells me a story of like, hey, buyers are back and they're active about, and maybe sellers are also listing their houses. So you're going to see these closed price to list price, closed price to your average and your median. That's all popping up as well. So we're seeing your kind of closed price to list price. So what it's selling for compared to where it's currently listed at, we're at like 98%. That's for the median, the average is at like 97.41%. So very, very close. Our closed price to original list price, meaning when it first came on the market, we're seeing 94% as the median, and the average is like 92.83. So we're looking at like, say, give it or take 93, 94% from the original price, and we're looking at 97 to 98% of the current list price. And you can see right this, year over year, that's better. So we are having a stronger October this year than we did last year, which makes sense because if you joined me earlier, when I was talking right here about pending and I'm talking about interest rates, here's the interest rates that we're in for like October this year. We're in the 6.3. We're below 6.5. If we go to October last year, we were above 6.5. We are heading to 9. So I am not surprised that this is stronger. It's about buying power and what sellers or what buyers are having to spend on houses and interest rates. All that matters. Now, you'll see right now we're only at 556 homes that have closed for the month. Typically, we don't get our final sales numbers, honestly, till like 2 more weeks. I would not be surprised. I mean, so last year we sold 640 homes, and right now we're at 556. Based on kind of what I'm seeing, and if we even look at like, here's our 30-day rolling, we're at 641, and us having a little bit stronger. I have a feeling that we'll probably beat the 640, but that's a big jump that's still there. We'll at least be in the low 6s. I really think, actually, no, I'm not going to say this. I don't think we'll beat the 640. I think we'll be in the low 6s because this is the sale, I think, next month. So I think November is going to look really good. This was just the start of it, the start of the activity here in Austin. So I have a feeling that, yes, that maybe that we're not going to beat this. We're going to beat our low. We already did. In 2010, we only sold 537 homes. And if you look at the historical average, so all the way back to 2005, we were selling about 884 homes a month. We're about 37% undersold on that, which is kind of rough. And that's also where I say there are a lot of buyers that have not been buying. because I've been comparing the historical average every single month to see kind of where we are, how many we sold to where we are historically. And you can see like this month we're 37% under, but we're going to sell more houses. So it's going to be a little better. But if you look at last month, we were 23% under. And if you look at August, 36% under, July, 36% under. I mean, June, 33, 29. And I mean, these are also including our really bad months, really bad years of 2022, 23, and 24 that have been really low sale years. So with that being said, to summarize everything, if you're just joining me now, I'll post this too so you can watch everything. But my name is Danielle Fountain. I'm the founder of the One Realty here in Austin, Texas, where we take a data-driven all-in-one approach to help buyers and sellers. With that being said, I think that we are going to see an uptick in our pendings, even though we had interest rates slightly tick up and we're at like the 6.3 something. I still had a buyer who got a 5.99 when rates were at 6.37. So you can still get below 6 if you can work with lenders depending on where your interest rate is, and you can negotiate back and forth with different lenders to get you a better interest rate because they also want a deal. At the same time, we're still below that 6.5. So last year we were up higher in the 7s at this time. I think we're seeing some buyer activity. I also think some buyers there's been a few times that I've heard of multiple offers happening recently. Now, not crazy multiple offers, not going way over, but I'm saying a house that's been on the market for 186 days all of a sudden has 2 offers out of nowhere. It's because buyers came back. So with that, if you were thinking about buying or selling and you want to take a strategic approach to this, feel free to reach out. You can find me at theonerealty.com. My name's Danielle Fountain. You can find me on X at the_one_realty. You can find me on YouTube at Austin Real Estate. I don't know how I ended up with that handle, but I am thankful for it. And yeah, so with that, I hope you have a wonderful rest of your evening and be safe this weekend. Bye.